Traders, how's everybody doing today? So today I'd like to discuss my equities momentum strategy and show you kind of the basic indicators, tools, and everything I use to build a successful strategy. The goal here is to provide you guys with what you need to basically create your own profitable trading. So I want to run through this fast, show you my thinking strategy, and then we'll go from there. So what do I see when I first see ASTS? First off, actually, let's start from the beginning. So ASTS, here's a trade I took right here at the 20 moving average. So we're going to discuss my equities momentum strategy today. And it primarily revolves around the 20 moving average. I have to trade within the 20 MA or within basically one average true range of that 20 moving average. And that's what the blue clouds are right here. So I sit down, I look at the market this day, and I think, okay, here we are testing the 20 moving average. So here's what I'm going to do. I'm going to break this down for you guys. I'm going to go relatively fast, and then I'm going to make future videos showing how I break down each indicator, each component, and I'm going to create a whole series for everybody to watch. So let's go. So first off, looking at this trade, we have a bit of a mess. You can see it's bouncing back and forth. It's going all over the place. It's kind of whipsawing back and forth. It hasn't made a directional move yet. So what I do first is I start by adding in the major lines on the weekly. So what are we looking at here? What are we encapsulated by? So first off, we've got a high here and we've got the low here. So this is basically the swing. This is the range that I'm looking to check the market within, or to watch the market within. So let me step back and start from basically the beginning of what I call a seed move or a seed vector or an impulse move. As you can see here, we have this move. It's really one of the strongest on the chart, not including this one back here. But in just a couple of days, the market ran up. Look at that, 91%, and then it actually ended up getting 100%. But let's take this first wave here. It's ran up 91%. So what does that tell me about the market? It tells me that there's buyers. People want to buy this stock. It tells me that this might be the seed move that then creates the secondary move. So if you guys haven't studied cycles or impulse waves, often there'll be an initial wave, directional wave in a direction, and then the market will come back down and often build a higher low or build a low somewhere for the next major wave that comes after that. So the first thing I'd be thinking right here is that, okay, so we have a low. It's really tested over a range, over a zone. So we test in here, and then we gap and we go through it. So when you gap and go through a market like this or low through this, and then you pop back above real fast, I call that, and a lot of traders call that, a wash and a rinse. So the market's been washed out, the lows have been washed out, the stops have been run, and they've been run significantly because they've been run past at least one ATR, which is an average true range of a typical bar. So I'll do another course on ATR in the future for you guys. Don't worry, I'll cover that. But basically, what's important to know right now is that this market has basically washed everybody out. And when you look at a day like this, where it basically closes on the low, you have to be thinking, especially with a wide range, you have to be thinking, is this thing gone? Or is this a potential wash and rinse? Is this kind of scamming people out of their positions? Because it looks terrible. It makes you want to go in and basically short everything. So I'd be looking at this day, and then I see this next inside bar day here. So look at this. The range is very small. The volume is significantly lower. That makes you wonder. It's like, why didn't price continue down? So mark that, and then we get the gap. So when you see a gap like this, that's a good sign that there's strong buying power coming in. So gaps are the strongest form of buying power, in my opinion, at least. And the market gaps, comes back inside, comes down, tests the gap, and rallies right through on a huge range. See, that's a pretty strong range bar. That tells you that there's a lot of buying demand in that bar. So what do? We close above the 20 period moving average. For me, that's a moment to look at the market and potentially make a buying decision. I didn't buy on this day, but there is a potential buy opportunity there. So we rally up, continual day after day after day after day, and we finally get a high somewhere around here. And right after the highs met, we stop run some breakout traders. We come down, we stop run some more traders. So we really get everybody on the wrong side here. And then we finally make the move back down. So that's what I'm looking at. Once we start moving down, I'm looking to say, where is that next low? If this is going to be a market that moves up, where is the next low going to be established? So as you can see, the next low is really established in the retest of the gap from the wash and the rinse. As you can see, we established a low here and we came out on extreme buying volume. That's a huge giveaway that some really strong buyers are nibbling underneath the low. So what happens when you have a really serious low like this, especially a long-term low, is a lot of stop orders start to get built on these levels. As they get built on these levels, traders know that if they can run that level, they can force those stop outs, which are sell orders, and buy up their sell orders. So it's an opportunity to find ample liquidity to get into a position if you want to go long. So that seems to be what's happening here when I was looking at the market. We have this here, we wash out the level, we make it look terrible, and then we have ample buying, strong buying to get back in. Then same here. It looks like somebody has done the same thing. It seems like there's a bit of a floor here. So they wash out this level, they buy the buy orders, and they're back in the market. So a lot of accumulation has been done here. So now the market's moving up. We're rejecting the 20 period moving average. And this is a day where it looks like there should be continuation to the downside. But just like this day back here, we have an inside day, inside bar, lighter volume. Makes you think, okay, maybe there's no continuation to the downside. Maybe we've built the higher low that we're looking for. So just as a quick instruction, a higher low doesn't quite confirm that a prior pivot is in, but it starts to build structure to tell you that you can start counting on another pivot. So what I do here is I take this high and I take this higher low. So the moment that this high gets breached, it's confirmed this higher low and this low in my book. That tells me there's something I can lean on here. So let's put that there. And then the market continues to rally up. Not really strong. You've got these wick days. What they're looking at here is fib traders, and I'll have a course about this. Fib traders are shorting this 618. So first they short the 50%, then they short the 618. They're looking for continuation to the downside, these targets down here. But because we see such strong accumulation here and here, it's likely that that isn't going to play out, but they're still going to play those levels. So let's delete that and let's actually put the fib here. So now that we've come up, the first fib draw you can say is here, and then the second fib draw is here. So where are we right now? We just tapped the 618, and we're coming back up. So I know I'm moving a little fast here. I will have lessons on fibs. I'll have lessons on everything you can imagine. So don't worry about that. So anyways, we're looking here. We're getting to a very interesting point. We're by the 20 period moving average and we reject again, just like we've rejected here. We come down and we test the 618. And honestly, there's not a lot of continuation on this bar. One of the things you have to realize is when you look at a market, you have to look at its past behavior, because you'll see signs of the sponsorship of the type of traders in this market, how they trade the market and what they do. Do they run stops? Is it a very pure market? In this case, you can see ASTS in the past, it ran stops. It ran the stops. It ran the stops. And it's quite possible it's going to do it again here. So we have strong down move, but just a strong buying up move. So this is where I've started to get interested. You have price closing right on the 20 period moving average. I'd be getting in right here, and I'd be using either a stop of low of day or somewhere around there. So let's do a low of day stop right below it. And this signifies the entry. This signifies the stop right here. So entries in, we're looking for a breakout of this inner pivot. So we have this high plunge down and sharp move back up. We're looking to have that locked in, just like this prior low here or this prior low here. So let me mark this for you guys and show you kind of how I think of washes and rinses. So I'd be marking this level like this, and I think, okay, it plunged right through. This should, this should be encapsulated. There's no real reason to come back and test inside of this wash and rinse anymore. So Let's step back for a second. Let's think about where we are and let's think about this logic. So right now we're trading the 618. We traded the 50, then the 618. We have a potential wash and rinse, and we're back above the 20 period moving average. We see signs of extreme buy and lower down and signs of support on higher lows here. So we can reasonably expect, and now trading, as you all probably know, is a probability game. Something could go wrong. Market could crash at any time. So it truly is a probability game, but the probabilities are stacking up for me here. So this is where I placed my entry. I'll show you guys the trade in Thinkorswim. If I can get those records out of there, but this is where I place my entry. So what I do is I take a screenshot, I'd save the record and be ready to go. So now something I want to introduce to you guys, and this is for a more advanced lesson, but I'll show you quickly, is the use of Alan Andrews pitchforks. Not a lot of people trade pitchforks. I like to trade pitchforks, but I don't like to keep them on my chart all the time because they kind of messy up the chart. So what I do is I take the low, the high, and the absolute low, and I start to look at this pitchfork right here. So what does this really show you? It's actually showing you kind of how a cycle moves through the market. Basically, you can take a low to a high, and sometimes you can assume a market could double out in its reaction. So as you can see, we have a high, low, right around here. This move down is almost double this move, basically. So it's a doubling out of price. At the same time, the pitchfork helps you see cycles. So you can say, we've got a low here, high here, low here. If we keep what you would call a symmetrical cycle, which is not always the case, it's a lot more advanced than this, and I can teach this in the future. But it helps you see where the next low should potentially be and how the market should kind of oscillate back and forth. So let me delete that. Let me make it clear. And then let's move forward and see what happens. Okay, cool. So checking this out, and you can just see this, we actually gapped this inner pivot right here. So let me draw this high. We actually gap pivot. And then you'll often see this happen when there's serious resistance levels. The market will often move overnight because then people's stops don't get stopped out. They actually gap over the stops. People that are shorter in a position like this find themselves at a bigger loss than they expected. And, a lot of them will actually just not close their position. They'll hold it thinking, okay, I can get back to break even. I'll wait. I promise I'll sell, get back to break even. And what it does is it locks those people in the market. So the shorts are locked in. The other thing it does too is it actually provides buyer power. So for the shorts that are stopped out, they have to buy, right, to close the position. So we have shorts that are buying. We have longs that are buying the gap above the breakout, and it helps push a bar like this. As you can see, the bag is basically closed here. They've locked everybody in. Now they're moving the market. So let's continue watching this trade play out. All right, so we have continuation. We just have a little pause day. This isn't too big of a deal. This is something you would expect. And look at that. Wow. Huge gap. So we gap over target number 1 and we land in target number 2. So TP2, 1.618 plus prior major high. So for me, I always take a little bit of profit here. As you can see, other people have as well. That's why we have a wick on that bar. It doesn't mean that the trade is done for. It's still in progress, but anything can happen. So I do like to take profit. And look at this volume confirming this move. Absolutely huge volume. All right, so let's move forward. Okay, another inside day we have here. Still good volume, still at the level. There's nothing overly concerning about this. So I consider us just still in the flow. We're still flowing, and boom, look at that. We hit double the range. That's my favorite target. I call that DVR. What you do is you take, as you know, from low to high and you double it out. So actually not that low to high. You take this low to this high and you double it out and you have your DVR target. So right there, we're at the double the range target. So, you can take a third off. You can do what you want. Just to reiterate, we've hit double the range target pretty perfectly. So as I was saying, you can take, 1/3 off here. You can keep going. This is a pretty extended move, but we're actually still trading above the 5-period moving average. So above every single day, there hasn't been a down day. This is a pretty powerful stock. Typically, when you're looking at pitchforks, one of your targets is the median line here, and then the upper median line is the next target. Upper median line, hitting that would indicate you've completed a full cycle. So this is a wave, right? It's going up, down, the wave completes and hits the top of the median line. And we tap the median line. So that definitely leads to a pause. We get inside bar, just about an inside bar, with a double bottom, lighter volume, nothing overtly concerning. So let's move forward. All right, we're still moving. And look at that. We actually tapped the median line and we find buyers, very strong, aggressive buyers, pushing that price up higher. So, and at the same time, I like to look at the S&P 500 by looking at the SPYs here. The market, you can see, was pretty clean at the time. We backed off a little, but ASTS is in its own world right now. So let's move forward. And now we're getting very close to the median line. What I like to do is I like to think of every line in terms of the average true range of a market. So just like I have a little ATR cloud around the 20 moving average, I would basically visualize an ATR cloud around pitchfork lines as well too. So let's say this is about 0.5 ATR here. And let's say this is about 0.5. And, I actually have the exact metrics, but I don't need to spend the time on that right now. So somewhere around here, we know we're getting very close to the median line. The upper pitchfork line. This is where I indicated that it was time to at least sell some. So I did make a sale here. And let's watch. So look at that. We actually gap down. The next day after the touch, we come up and we reject. And we're rejecting again. You can see by the larger wick there. A very important line to look at is the highest close. So put a line here and highest close to find sellers. So I like to put a nice big line right there. You can see we tapped it and we pushed off quite significantly. So let's keep watching. We're above the 5-period moving average, but we're rejecting here. So we're coming into a very tight market. And then look at that. We test the highest close again. And this time we actually have a pretty large body and it closed below the 5-period moving average. Since we've been holding the 5MA this entire time, this is where I would start to get a little bit concerned. So let's keep moving forward. Okay, now we're closely below the 10-period moving average. I'll cover this in another course, but a close below the 10-period moving average for me is a sign to close your position or close a significant amount of it. That's a trailing stop rule that I have. All right, so we're back on the median line right now, and we're holding the median line, holding it again. We gap up, but we close with a lot of selling pressure. And as you can see, we actually tap that 10 MA right there. So let's go. Now we've actually tested into the 20 MA cloud. Still selling pressure, still below the 10-period moving average. This market looks a little bit weak to me. And there we go. We break right through. It's almost as though the 20-period moving average isn't there. So for anybody that was trying to buy on the 20 MA, they either got washed out or they pulled back their order. So now we're moving down. With a bar like this, wide range bar, low close, basically expect continuation. Anything that isn't continuation is making you wonder why it's not continuing. All right, so we have an inside bar, mid volume day. We test the backside of the 20-period moving average. Just the middle day, nothing too important. So this is where I actually ended up entering a position for another long position. What do we have going on here? We have boom. The low gets tested. We have this bar. Some traders call this a scam bar actually, because it's intentionally meant to look so bad to pull people out of the market, get them selling. And then you can see we actually travel up this ATR cloud right here, this 20 MA ATR cloud. So we're testing. And as you can see, this is a sign of buyers nibbling the market. They're basically front running themselves right here. So they buy right above the prior low. They buy right above the prior low. And now on this day, we actually close above the 20-period moving average. So mark this. I ended up buying here. I had a stop below the low of the day. Some traders, if you want to be safer, could actually have a stop below the actual low. And then I'm long market. So let's put the levels in. This is the pivot high. This is the body pivot high. And let's see what happens. Okay, cool. So we test back in. right below the 20 period moving average, and we push higher and we push right into that pivot. So good wide range. This is looking like a good day. We have targets at the price higher close, and we'd have targets somewhere around the upper median line. So right now we can actually take away the fibs. I'll give you a little preview of a special type of fib called the extension fib. So when a market moves very fast, a traditional fib draw, which is low to high, isn't going to capture the move. So what you do is you go from high to potentially capture a move. So what do we have here? We actually now can see that we tapped the 382 and he came back inside. So we actually have confirmation on a lot of levels. We have an upsloping 20 period moving average. We have a wash and rinse of the low, and we have support on the 382. So let's watch this market. Okay, we're moving well, moving well. Oh, and there we go, right? Through previous high of the day and the previous highest close, and then we're going right back up. So now we're getting back into that dangerous territory once again, the upper median line and the actual TP1 of the extension fib. So let's watch this. Boom. And I mean, that is a perfect tap right there. We hit the target and we hit the upper median line, actually right on the line. So I sold a little bit on this day. It's a little bit concerned. So let's keep an eye on it. And here we are, we're live. So live today, we're actually testing the levels once again, and we haven't broken through. We had a nice liquidation yesterday that tapped a 10 period moving average, and now we're right back here. So I'll continue to watch this, but yep, this is a not so quick preview of my trading strategy. I utilize pitchforks, fibs, moving averages, different levels, you name it. I'm going to have individual instructional courses on everything, but hopefully this gives you an idea of my equities momentum trading strategy. So thank you all for listening, and please subscribe to the channel. I can't wait to keep teaching my techniques